I really liked Monsieur Dufresne's comment around the big fish, right? The big fish and the little fish. And this will kind of get into the question you asked me up front there about whether Canadians were protesting CETA and why not and that kind of thing. And I mean, the truth is they weren't protesting CETA in the same way we saw in Europe, to the same extent that we used to protest the Canada-US Free Trade Agreement in the 1980s. And so in the early 80s, it was a huge debate. And in fact, the amount of protest, the amount of groups opposed to that deal was the majority. Essentially, the majority of Canadians opposed the Canada-US trade deal to begin with. And so there was a mass mobilization of groups from across the NGO spectrum, environmental groups very heavily involved in that. And that was the big fish, right? The United States were, as they were with Europe here, they were the big fish for us, and they were the evil states coming to take our jobs and take our water, and some people said even take our blood. Was worried about some, the trade in blood services or something like that. And I think that a lot of the reasons people protested those agreements, they're the same as why we protest today. Back then, it might have seemed novel to be saying that a trade deal is going to result in job losses, or it's going to undermine our ability to regulate for environmental protection, or it's going to undermine our regulations with respect to food security and food safety and these kinds of things. It may even result in job losses. It may even depress wages. I mean, these are the things people were saying back then. And these were arguments that have been thrown in our face in the years since, when we point to cases of this happening and saying we're always making the same arguments. But there was a adjustment period after the Canada-US Free Trade Agreement and NAFTA in the United States. There was a somewhat painful adjustment period in all three countries. Some countries haven't recovered from it, right? So we talk about trade liberalization always being beneficial, right? In principle, it's just a matter of redistributing. Well, in places where it doesn't get redistributed, for example, in Mexico, we've seen wages recently go down below the levels that they're at in China. We've seen total, the labor share of income, for example, after NAFTA, dropped by about 50% in Mexico, and it went down actually in the United States and Canada. So, our experience with the NAFTA period is one of, yes, absolutely a tripling of trade between the three countries, but it's also a period of stagnant wages. And of course, this isn't all attached to NAFTA or trade deals, but it is a period, there's no doubting, of stagnant wages for the middle and lower classes, rising inequality. We see, of course, this is another global preoccupation today. I mean, it's hard to deny that wealth is being concentrated in the hands of fewer and fewer people. Oxfam puts out reports every year showing how many fewer people it is, and you can fit them on a single private jet now, I think, that own half of the world's wealth. And so what wealth is being created through agreements like NAFTA, and it is considerable, is going towards fewer and fewer people. And another aspect of that is today we see around this kind of period post-crisis, growth has been much slower across the OECD. In Canada, we've estimated at the CCPA, the research institute I work for, their corporations are sitting on about $600 billion worth of money that they're simply not reinvesting in new jobs and not reinvesting in new product production. This is money that corporations these days more and more prefer to put into tax havens or to invest in speculative activities, right? There's nothing in NAFTA that can help us get that money back and make sure the companies are reinvesting it into the economy. And likewise, there's nothing in CETA that's going to do that. CETA is actually so similar to NAFTA in the broader macroeconomic sense in terms of tariff reduction and whatnot. I would say CETA is a 20th century agreement in the sense that it is so similar to NAFTA. It's a 20th century agreement to deal with the problems that we're facing today, which were much more important than how do we increase trade flows marginally between the EU and Canada, because they're already good. I mean, Canada is, the EU is Canada's second largest trading partner. And most of the studies, even from the European Commission, have shown that CETA is not going to have a huge impact on Canada-EU trade. How do we expect this agreement to deal with the issues that are really pressing down on us today, which are growing income inequality, the climate crisis? I mean, I don't think CETA says anything at all, really, about climate change in any of its chapters, maybe in between the lines in the Sustainable Development chapter. I think if you look at CETA's, and this is where you get into the rules of the agreement, the ways that CETA is not a trade agreement at all. It's more like, as we've mentioned already up here, a constitution type document, right? It goes well beyond lowering tariffs on European exporters. It has chapters on public services, well, not public services, excuse me, services, for example, and which aims to kind of create transnational rules with respect to how governments can regulate the delivery and provision of services in their communities, whether it's telecommunications, whether it's finance, whether it's health services, insurance, these kinds of things. And these chapters make an important impression actually onto public services as well, especially as you think about when countries privatize their services, right? The ability of governments to expand public services, to create new services where they don't exist, whether it's a new transit system, whether it's expanding long-term care, whether it's expanding public driver's insurance, for example. These agreements make it much more difficult by creating trade risks to doing so. So in CETA, we have one of the most expansive, from the Canadians' perspective, services chapter, which we feel is going to have an impact on governments looking to expand services in the future. They will think twice, for example, before introducing public childcare in Canada or public driver's insurance, again, as an example, because there will be the risk of these investor state lawsuits, as we talked about, from doing such a thing. I think, you know, if I can digress on the issue of why I'm talking about public services too, I think that public services is one of those things that is a solution to today's crises, right, with respect to jobs and with respect to income inequality, in the sense that, one, we know we need the services, right? We know that as the populations are aging, we know that more and more we're going to need people to be in high quality long-term care. We're going to need better healthcare systems. We know that this is also a sector that you can grow sustainably. It's not a sector that as you grow it, you're digging up more and more ore from the ground to produce something that everybody has already, right? Like the new version of the iPhone. This is a sector that is the embodiment of sustainable growth, and that you need the service. It is well-paying. It's a sector where women and men tend to be paid similarly versus in the private sector, where you see more bigger gaps between men and women's pay. So if you're developing an agreement like CETA that's going to get in the way of you expanding public services, and I think that it will, because of these threats we're going to get from private companies who say these are services that should be divided privately, then I think it is putting a barrier in the way of one of the very promising solutions we have to get us out of this current slow growth era, right? The second point I'll make is around the environment. And again, this comes back to our Canadians protesting the CETA. Well, not the CETA, but they are protesting very loudly on environmental issues. And there was recently well, I suppose some groups would call it a victory, others would call it a major defeat, but there was this pipeline that was going to be built from the tar sands to the east coast of Canada, the Energy East pipeline, which was hated by Canada's Indigenous populations, hated by environmental groups. And the company has decided they're not going to go ahead with it. Of course, they're saying, well, it's because of, you know, these stringent new environmental rules the Trudeau government has put on them, which aren't actually all that stringent, but or that there's just no business case for it anymore. But the point is, this pipeline would have been the antithesis. It would have been the total contradiction of sustainable development, right? It would have facilitated an expansion of the tar sands, which we know, and I know you know, in Europe, is one of the most carbon-intensive types of energy on the planet. You know, a pipeline that was going to expand the tar sands when we need to be completely phasing off, and we need to be cutting ourselves off fossil fuels entirely if we want to even talk about sustainable development. This is something that in CETA, companies have a right to sue, right? So we talked about this is the ISDS process. We've seen a lawsuit already by a Canadian company against the United States government for Obama's decision, now being reversed, of course, to approve the Keystone Pipeline, another major project to bring tar sands crude to U.S. refineries. And they sued for $15 billion because they felt that their rights under NAFTA had been violated. And probably they had a case. I mean, if you talk to investment lawyers in North America, they say, yeah, the company has a pretty good case, that the government violated their NAFTA rights. And so here we have in the CETA, reproducing the exact same process with some minor adjustments. I mean, we talk about the investment court system. Yes, it will be procedurally more open. There will be a roster of arbitrators. But the rules are the same, right? The rules that allowed Keystone to bring its case against the United States are exactly the same. And in some cases, more expansive, more pro-investor than in the NAFTA. If you look at the fair and equitable treatment section of the CETA, for example, it is a more expansive definition that would make it likely, we think, in Canada, that we're going to see many more investor state cases from European companies. So yes, the environmental groups in Canada are aware of this, and they are starting to push back in these NAFTA renegotiations where there is an opportunity. You have to remember that CETA is now completely implemented in Canada. According to our government, it's been totally ratified, and they keep, as we say, we keep rolling over and going to the next agreement for promotion reasons or whatever. We're dealing with the NAFTA negotiations now, which is another side note, but even in the NAFTA negotiations, Trump, we know, is an insane person, right? Trump is a horrible president, but even he is outdoing the Democrats on things like investor state reform. He's proposing exactly what I just said, that we should get rid of these minimum standards of treatment in these investment treaties, because they're the most abused sections of these treaties. They're the sections that companies use to challenge states all the time on these lost profits. Anyway, if we're being out-Trumped, I think it's kind of depressing. But the final thing I'll say, and probably we can talk a lot more about ISDS. It is obviously one of the most interesting and worrying parts of CETA for Europeans. But I think another one that's not been discussed as much, and I brought a report we did with several European groups here today called Corporate Lobbying Through the Back Door. It's this regulatory cooperation chapter. So this is legitimately new in the CETA. So CETA is a NAFTA plus agreement with these kind of legitimately new sections, and one of them is the regulatory cooperation chapter. Cooperation sounds great because it's a very positive thing in most circumstances, but in this case, the chapter is really another space where industry, whether in Canada or Europe, we feel can collaborate to undermine, delay, and otherwise stop public interest regulations and rules from going ahead. Think about how much lobbying the Canadian government does against European toxics legislation, against European pesticides rules. You know, Canada has challenged the EU many times in the WTO, fighting food issues, right, for example. And here, this is the one, actually, again, going back to the big fish, this is like one of the only Canadian proposals in the CETA was they wanted this regulatory cooperation chapter, and it's because they know that they can use this to put delays, to put extra checks and balances on behalf of industry on the European regulatory process. We've seen it happening. It's new in CETA, but there are regulatory cooperation councils that exist in the Canada-US context. Basically, the process starts when a company or an industry brings an issue they don't like, a rule they don't like in the United States to the government. That starts a process of consulting with industry and government together. And at the very end of the day, they might bring in a civil society stakeholder to ask if this is a good idea. And who knows? I mean, it's not a very open process. We don't know how much that input is taken into account. But then at the end of the day, some kind of harmonization takes place, or mutual recognition of each other's rules, which of course in the Canadian and European context could be quite worrying for people who don't like the sounds of, you know, beef that's been grown from cloned animals, or who don't like the sounds of genetically modified salmon, right, which Canada just accepted its first shipment of from Panama, based on Canadian technology, which I apologize for. But you know, and you don't like the idea of spraying carcasses with chlorine. Our government thinks this is good regulation, and they want to use the cooperation chapter to make sure that the European stakeholders feel the same way. So those are three ways I think that CETA really does act as a barrier to sustainable development. It can't help us in these other respects. If we want to talk about reducing income inequality, we're talking about things like getting taxes back from tax havens. We're talking about redistribution, whether it's from the European Union, within the European Union. We're talking about forcing wages up instead of allowing these trade deals to continually push them down as companies seek out the lowest wages. And you can do that through the expansion of public services, as I said, or through the use of government debt. You know, flood the economy with government bonds, government debt that might bring interest rates down. CETA does none of these things, actually. CETA, in many ways that we could talk about later, some ways I didn't discuss, gets in the way of that. And I think that that would be enough reason for any country, including France, to put a pause. I mean, there's no reason that countries must feel the need to ratify this agreement simply because the European Commission wants them to, and because the Canadian government already has. The Canadians we're the small fish. Like, we're going to do whatever Europe wants. And so if France wants to take a pause, there may be some tears, but if France wants to take a pause, that would be a great thing to request, I think. And if it's not France, then we hope other countries along the tour that we're doing will decide the same thing. So thanks very much.